Welcome everybody. My name is Christian Ludwig. I'm head of IR at DEUTZ. Today I would like to run you through the highlights of our first half 2021. But before we start, please have a quick look at our disclaimer. 2020 was a very difficult year for us due to the COVID-19 pandemic, but we have seen a solid recovery in the first half of this year. Our new orders increased by 65% to more than 1 billion. There was a small one-off effect in that figure because some of our customers brought forward orders in response to price adjustments. We had some customers who brought forward orders due to longer lead times, and also the discontinuation of an engine series had a small effect. But still, we had a very healthy book-to-bill ratio of 1.34. And at the end of June, our orders in hand increased by 110% year over year to more than 430 million. This positive business development is also reflected in our unit sales, which were up almost 27%, and also as well in our revenues, which increased by 24% to 770 million. But even more important is, of course, that we are back to a profitable business. After 4 quarters of negative or no earnings, in Q2, we were finally able to show positive EBIT again with 3.7% margin. Our operating profit in the first half therefore improved to 16.8 million, and the EBIT margin before exceptional items in H1 was 2.2%. So there we are already at the range of our 1 to 2% EBIT margin guidance for the full year. And also on a net basis, the earnings per share before exceptional items came in at 12 € per share for the first half of the year. And also on the balance sheet, we had some very positive improvements. The working capital, despite a strong growth in our revenue, only increased by 4.3% in the first half of the year. The working capital ratio thus declined by more than a percentage point to 17%. This, combined with our positive operating development, had a very positive effect on our cash flow from operating activities, which increased by almost 90 million to 44.7 in the past year period. And of course, also our free cash flow benefited from that. With 9.7 million after 6 months, we're finally back in positive territory. With that said, now I would like to talk a little bit about our strategic highlights. What I first would like to highlight is the continued successful implementation of our China strategy. Especially our joint venture with SANY showed very positive results in H1. With unit sales of roughly 50,000 engines, we were able to generate revenues of approximately 125 million. The equity contribution for the DEUTZ P&L was roughly 3 million, as the joint venture is already at an EBIT margin of between 4 and 5%, which is significantly better than what we had expected before, as we are still in a ramp-up phase. This year, we're planning to increase unit sales to 30,000 to 40,000 engines after 20,000 last year. And for next year, when the new factory is ready to produce engines, we want to expand the business to 80,000 units to meet our 800 million euro sales target for China. In the midterm, we expect to completely fill the factory, which has a capacity of 200,000 units. But also our sales force had some very positive news to report. We were able to prolong the long-term supply relationship with our partner ECO. So far, we were able to supply 6.1 and 4.1 liter engines for selected vendors. Additionally, we'll also now collaborate on the development of future powertrain technologies. And we're also looking into a closer collaboration for sub 150 horsepower engine and their components, business that we so far did not have with ECO. And we were able to win a completely new customer with ASCO, a Turkish machinery supplier for agriculture and construction machinery. We will be supplying all 4 brands of ASCO with Deutsch engines, replacing the incumbent engine suppliers. Midterm, we believe this has a potential of more than 10,000 engines annually, which is roughly 50 million annual sales. We will also expand our service business through ASCO's local service network. And if everything goes as planned, we may even be looking at a joint venture for local engine manufacturing down the road. Finally, I'd like to draw your attention to one of our newest products. As you can see in this video, our new hydrogen engine is already on the test bench. The TCG 7.8 H2 engine meets all the eligible criteria set by the EU for zero CO2 emission. It's based on a classic DEUTZ 7.8 liter diesel engine. We have designed it for use in stationary equipment, generators, and rolling stock. With our local regional utility partner, Rhein-Energie Cologne, we have already a pilot application for stationary equipment for power generation scheduled to commence at the beginning of 2022, and the engine is scheduled to go into full production by 2024. This is a very important step for us as it takes us towards a future of climate neutral off-highway drive solutions. Finally, I would quickly like to talk about our group guidance. Since my last video, we were able to increase the guidance to 140 to 150,000 DEUTZ engines. This translates into revenues of 1.5 to 1.6 billion and an EBIT margin before exceptional items between 1 and 2%. But of course, we are targeting the upper end of this range. And also on the free cash flow, we have some positive news. We now are looking for a negative low double-digit million euro amount. Previously, we had said a negative low mid to double-digit amount, but this included a one-off payment of 60 million from the final installment of the purchase price for the sale of the Cologne DEUTZ real estate site. As the city of Cologne and the real estate developer have not come to terms yet, this payment will most likely move into 2022. But still, we were able to increase our free cash flow guidance. So this underlines the very positive development DEUTZ has took in the first 6 months of the year. Thank you very much for listening, and I hope I was able to pique some interest. Please give me a call if you have any additional questions. And thank you very much, Seat 11A, for having us today. Goodbye.
Hi there, since you watched this company video until the end, I'm guessing you liked the video. And that's probably because we work very hard to create the most engaging and added value content for you. If you're a company and want to find out how we, at Seat 11A, can make a company video with and about you, please email us at content@seat11a.com.